Welcome back. The great tech layoff season has arrived. The layoffs are happening all at once and they are brutal, to state the least. Last week, Twitter laid off thousands of employees. Today, layoffs have begun at Meta. Worldwide, they're sacking 11,000 people. To put that number in perspective, that's about 13% of the workforce. Not just these two, other companies too are trimming down their workforce. They are the likes of Snap, Lyft, fintech giant Stripe, and even Indian edtech companies, Byju's, Unacademy. So how did we get here? Well, simply put, it's a case of outsized growth. The companies grew too fast. This could be their way of recalibrating, especially at a time when the world is coming out of a pandemic. People are no longer glued to their devices. The big question is, what do these latest layoffs mean for the big tech? And is this a Silicon Valley problem? Are we going to catch that cold here in India? Manish Maheshwari, former Twitter India head, with me on the show. Sabina Devan, founder and ED of Just Jobs Network, joining me today as well. Welcome to both of you, and thank you so much for speaking with us today. Manish, let me get your take. You know, in Twitter's case, it was all about Elon has come in, he's the new owner, he wants to reset, do things his way. What about Meta? It's not like anything has fundamentally changed for them.
So in case of Meta, right, three things have happened which are impacting them at the same time. One is, the revenue is softening primarily because of the privacy changes that Apple did, and that has caused a weakness. They're also facing competition from TikTok. On the user side, the user growth is not happening because they have hit the limit on how many sort of human beings can use Facebook. I mean, they already have 2 billion daily active users, so how many more can have it? And thirdly, they have made a lot of investment on the metaverse side, where I think investors are not quite happy. The stock is down 75%. The market cap of Facebook used to be, or Meta used to be $1 trillion. It's at 250 billion right now. So clearly they have been hit on all three fronts, right? On the investment side, I think they have overcommitted on the metaverse. On the revenue side, they have a problem with their relationship with Apple and competition from TikTok. And on the user side, after 18 years of growth quarter on quarter, now they are seeing flat or even negative user growth, right? So that is where I think, as a company, now they're tightening the belts. Everyone's expecting there's going to be a recession, which might continue for a couple of quarters. So, why carry so much cost base? So that's what is driving such a huge layoff. I mean, 11,000 people in a company like Meta is a really big deal. And I think it's a really big deal for any Bay Area company.
You know, I'm very, maybe silly layman question, Manish. What kind of planning is this if you had 11,000 people who are just hanging around expendable overnight, no matter what the scale of your business is? Were you wrong in some way if you had 11,000 quote-unquote extra workforce?
Yeah. People extrapolated, assuming that the COVID times will continue and the kind of acceleration that has happened in adoption of digital tools and technologies, that will continue, and what would have taken 10 years will happen in 2 years, right? So they planned capacity, they added infrastructure, they hired people, assuming that this will continue. Now, COVID is no longer there, right? So I think people are going back to some of the old ways, and they overestimated the impact of COVID, number one. Number two, no one saw this rate hike in the US coming so quickly. The pace at which the Fed is raising the interest rate. And these are tech companies, right? So I think their valuation and I think their investments are long-term. And valuation is a function of your discounted cash flow. And when the interest rates are higher, the valuation goes down. So again, there is also a decreased appetite to invest in these businesses. So it's a combination of multiple things. And clearly large companies also make a mistake. I mean, it's not like only small businesses do overestimation or get it wrong. I think when large companies get it wrong, they get it wrong at a colossal level. And you can see this happen right now.
Yeah. Sabina, I want to talk about the Indian context. Of course, jobs were lost in Twitter and perhaps will be at Meta in India as well. But that's not really the biggest concern from our point of view. Look at what's happening with the startup space. Crypto is collapsing. Startups have had a tough bout. There's some estimates that 15,000 jobs have been lost in this sector in India in just this year. Is it going to get worse as some of these large companies now prepare for a global recession and lessening of revenues? Will we see a spillover effect?
Yeah, thank you for that question. I think it's exactly the right one. And your previous question about these big companies that have extra workforce, I think this just points to the fact that workers, when they don't have good wages, social security, when we're moving towards greater precarity in the workplace and these contractual arrangements where workers are expendable, this is what happens, right? But let's not forget that there's a knock-on effect. If people are tightening their belts, if workers don't have wages, then they can't spend money, and that creates a vicious circle. And that's also true when we talk about startups. Of course, in India, we're very proud of having an innovative entrepreneurial culture, which I think is deeply valuable. But at the same time, if we overestimate the promise of startups in terms of actually fostering development or raising living standards, if we overestimate what it means to be an entrepreneur, right? That anybody can be entrepreneurs, and that entrepreneurship has benefits broadly, which it doesn't for everybody. Entrepreneurship is hard. If we overestimate the positive impact of technology, this is where we end up. We end up with, grossly overvalued companies. As Manish said, now interest rates are rising in the States. Capital is no longer as cheap. So VCs are thinking twice now, and they don't have as much of a loose hand. So yes, we will see the knock-on effects of this. This is bad news for Indian startups, Indian tech companies, Indian platforms that are here. USA and Canada alone account for 58% of our software services exports, and Europe another 28%. So upwards of 85%. And if consumption in the US, in Europe, starts to wane because of a global recession, then the knock-on effects will be on companies in India for sure, as well as on startups. And I think that this is something to look out for.
Manish, just to the point of whether we will see the chilling effect here, and is it going to extend to our big three, our big IT firms?
Yeah, answer is yes. The short, the business shrinks. They would also have an effect in real sense. The second would be everyone would be cautious about making new investments, so that will also have an effect. So the short answer to your question is yes, it would have an effect. Companies which are well managed, well planned, and companies which have been frugal and they have not hired a lot, I think those would be in a better situation right now than companies which have been very spendthrift. So I think frugality is back in fashion. I think that's how I would put it.
From the point of view of the employees, Sabina, if you're overworked and underpaid, you're probably better off right now than if you have less work and perhaps are paid too much.
Well, I mean, no, I would never agree with that statement. I think
no, I mean, from the point of view of companies which are frugal, yes, might have to not take these tough decisions.
Yes, but labor costs are not always the highest proportion of costs, right? There's a lot of other areas where company can cut costs. Unfortunately, we live in a society where workers are treated as expendable, when in fact these companies are built on the backs of productivity of workers.
I'm so glad you brought that up. I'm so glad you brought that up. Byju's sacks 2,500 people and hires Lionel Messi.
Exactly.
All of these tech companies that are sacking people are spending huge amounts of money on advertisements. Yeah. And in the US on advertising the Super Bowl, etc. So this is the expendable cost. Human beings, employees are the expendable cost, isn't it, Sabina?
Absolutely, absolutely. I couldn't have said it any better myself. I think that that we need to look at these cost structures, and again, this is all going to come and bite these same companies. It's going to come around and hurt them, because ultimately, if there is higher levels of unemployment, if workers aren't getting paid enough, they're going to tighten their belts. And in Europe, we're already seeing high energy costs, high inflation. In the US, we're seeing high inflation. Here, we're seeing high inflation. And when all of that happens and consumers start tightening their belts, and on top of that, you add unemployment and an ailing labor market with poor working conditions, you are going to get a decrease in demand. And this is going to come back and hurt these very companies that treat their workers as expendable. It is deeply problematic. And I think it's about time that this bubble bursts and we have more realistic valuations of particularly a lot of platform companies.
Well, this bubble burst is going to hurt beyond just tech. The financial system and huge companies in the financial sector are also sort of on the edge. Credit Suisse sacked a lot of people recently. So it's not looking good as of now. Let's hope it gets better before it gets worse. Thank you so much, Manish, Sabina, for joining us today. Always a pleasure to speak with both of you. Moving on.